Hello, everyone, and welcome to Ask Abby. We have a particularly awesome show for you today with some cool new features that break down some of these nitty-gritty topics into really unique, easy-to-consume animations. So we've shared a couple of basic finances videos on our Facebook page in the credit score series. So you may have seen a little bit of this before. Today we're kind of combining Ask Abby with basic finance. So it's going to be awesome. And if you haven't checked out their Basic Finance YouTube channel, please go ahead and look it up. You can find the link in our Facebook page. So go check out Basic Finance's YouTube channel. They have a lot of great, easy to consume content on some of the most basic financial topics, hence basic finance, right? So make sure as you're watching this, like our Facebook page to get notifications for our Ask Abby show, because we are going to continue to do these kind of mashup content pieces. And so you'll get both a little bit of Ask Abby and some basic finance animation videos as well. So today we're talking more about credit scores. Last week we talked about credit scores as well. This is a big series because it's a big topic, right? So before you tune out because you're thinking, joke's on you, I don't care about my credit score, I'm going to convince you why you should care, but that's last week's episode. So make sure you watch last week's episode, why you should really care about your credit score if you're thinking my credit score doesn't affect me, right? So if your credit score is in the 300 to 400, below 600 range, so 3 to 600, and if you're not planning to make a big purchase like a home or car soon, you might be thinking, I don't need to worry about my credit score. Well, that's not necessarily true. So for those of you thinking that, go ahead and watch last week's episode. Also, if you're sitting there thinking, I have no idea what a credit score is or how it works, watch the basic finance video on what is a credit score. It breaks it all down for you really easy. It's 2 minutes long. It's great. It's a great video. Now that we've got all that out of the way, we're going to dive into today's show, which is about 5 ways to improve your credit score. The good news is if you have a 300, 400, 500 credit score and you're now in agreement, hopefully, that you should be caring about it, there are steps you can take to start working in the right direction of an improved higher credit score. So your credit score is not static. And that's good news because as things change for you financially, your credit score will fluctuate as well. As your score fluctuates, the range in which you sit fluctuates with it. So with each step forward, you make progress towards that next bracket or a new credit score range. So as we dive into that, we're going to drop a little animation for you to make things really easy. So there are several different models for credit scores. For example, FICO and Vantage both have their own credit score models that vary slightly. But for the sake of today's video, we're just going to use FICO credit scores to keep things consistent as we talk through them. So FICO credit scores range from 300 to 579 for what they consider poor, 580 to 669 for fair, and 670 to 739 for good, and 640 to 799 for very good, and then higher than 800 is considered exceptional. The biggest thing to look at when considering this chart is not to get discouraged. Not only is your credit score dynamic and always changing, but 33% of people sit in that poor to fair range. So you're not the first person there, and you certainly won't be the last, and you're not alone. That doesn't mean, though, that you shouldn't work towards improving your situation, right? So now that you know where you sit in these ranges, let's talk about how to get that number moving in the right direction with some ways to improve. We're going to talk about some really simple ways to improve your credit and your credit score. There are things you can do long term, but what we're really focusing on are the right now changes you can make, hopefully, and see some immediate improvements. So, number one way to improve your credit score is check your credit report for inaccuracies. We talk about this every week, but the number one way to improve your credit is to check your credit report for inaccuracies. Plus, it's free and easy, right? So you don't have to do anything crazy to get this improvement. It's also free to check your credit reports on annualcreditreport.com. Usually, you can get your credit report for free once a year, but right now, you can get a free credit report on annualcreditreport.com every week through April of 2021. So, there are types of inaccuracies when you get your credit report that you should be looking for. One of them is incorrect personal info, accounts that are not yours or don't belong to you, closed accounts that are still reported as open, duplicate accounts, so if you have the same account showing up twice, inaccurate payment history, and an outdated balance or credit limit info. So these are just a few types of errors you should be on the lookout for when you go to get your credit report. Make sure you definitely want to check for those things. Some other things to be on the lookout for are accounts that are not yours, because if information was found, someone could have opened an account in your name and wouldn't have known it. So scams are super active right now. Personal information is more vulnerable than ever. So make sure you look closely and make sure that you are not a victim of identity theft or credit fraud. Make sure also that there aren't accounts on your credit report that you closed in the past but still show as open. While you do that, you can also check for duplicate accounts, because duplicate accounts can raise your credit utilization ratio, which is a major factor that affects your credit score. So, for example, if you have one credit card maxed out, meaning that your credit utilization for that account is 100%, that could drop your score a ton, especially if it's shown twice and you only have the one account. So definitely check that. The last couple of things to check are inaccurate payment history, outdated balance or credit limit info, and then that way if it says you've missed a payment and you haven't, or you've caught up, you want to make sure that that's accurate and up to date on your report. So as long as all that looks good, you can cross-check those last few with your credit card and loan statements just to be sure. So that's one of the easiest ways to improve your credit score. So, Number one way to improve your credit score is not only that simple, but it's also free and fast. So why not, right? If there's nothing you can do to improve your financial situation just because you're overall in a tight spot financially, this one you can definitely do. If you need help navigating your credit report because you've never looked at it before, our coaches can absolutely help you do that. So if you've never looked at it before, or if you're not really sure what you're looking for, give our coaches a call and we can help point you in the right direction. So that was number one. The number two way to improve your credit score is we're going to talk about payments. There are a lot of payments or factors that go into payments and your credit score and how your credit score is affected, like paying your bills on time, communicating with your lenders about payments, getting your payments deferred. All these actions can ultimately have some sort of effect on your credit score. So rather than breaking each of those out, we're going to say that the number two way to improve your credit score is to just plan your payments. There are a few ways to do that. Number one is to schedule your payments automatically to withdraw from your bank account or a payment method like a debit card. So most banks also offer a bill pay option in which you can sync up your account and let the system know when you'd like to make that payment every month. There are other online sites for things like car payments or phone bills, etc., that allow you to input a payment method like a credit or debit card and then schedule your payments to withdraw automatically every month from that payment method. The easiest way to ensure your credit score is heading in the right direction is to make sure you never miss a payment, especially accidentally, right? It's one thing if you're struggling financially and you need to make some changes. It's a whole nother thing if you just flat out forget. So for those of you who don't have your payments on an automatic payment withdrawal schedule, it's not a bad idea to put a reminder in your phone or on your email calendar that reminds you to pay your bills every month. It's also not a bad idea to do that anyways if you do have it automatically withdrawing. That way you know exactly when money is going to be pulled from your account and what bill it's going towards. Lastly, it's important that if something with your payment schedule changes, communicate with your lender. Unexpected things are happening, especially right now in today's atmosphere financially. So when you're facing a reduced income, a layoff, furlough, or unexpected expense that will prevent you from paying a bill, call your lender before you do anything else, your lender or your servicer or your landlord if it's rent that you're talking about. A missed payment can affect your credit score a ton, and sometimes if you communicate proactively with your lender, they'll work with you to set up either a payment schedule, they'll waive late fees, or even sometimes right now especially, defer your payments, which can prevent a negative ding to your credit score. So number 2 has 3 things in it, guys. We have the overall message is just make your payments, and if you can't, communicate with your lender, because a late payment doesn't have to negatively impact your credit score if you're proactive. So that's number 2. The number 3 way to improve your credit score is to pay down your debts. There are a few different methods to successfully pay down your debt, and some of them you should be cautious about because they may initially hurt your credit score, but in the long run, they could make things improve more quickly and move the right direction, right? So we are going to talk about a couple of things, a couple of methods to pay down your debt on your own. One is a debt snowball, and one is a debt avalanche. Shout out to Dave Ramsey for these great methods. He talks a lot about these. So a debt snowball method basically says that you should make the minimum payments on all your accounts and then really focus on starting to pay off your small debts first, meaning the account with the lowest balance, right? So that's where you start. This improves your credit because you'll be reducing your credit utilization ratio, and that's good news. And then after you pay off that one lower account, you reallocate those funds to the next account and so on and so forth until all your accounts are paid off. That's great because you're paying off your smallest accounts first. It happens a little faster. You get a morale boost and you get that credit utilization ratio decreased, which makes your credit score go up. A debt avalanche is similar, except that you start your focus rather than on your lowest balance on your highest interest rate account. So whichever method you choose, we have one big heads up. Don't close any of your accounts until your debt has been reduced significantly. Closing accounts when you still have high balances on your other accounts can increase your credit utilization ratio and end up hurting your credit score before improving it. So that's our big heads up. With that warning, we can talk about one other big way to reduce your debt, and that's by, of course, talking to our coaches. We say it every week, but our coaches will give you a free debt analysis of your finances and lay out all of your options. So if you have $1,000 in debt or $100,000 in debt, our coaches will give you your options, let you know exactly how long it'll take for you to pay off that debt, and they'll give you various strategies. If, let's say, you can work on a debt avalanche or debt snowball method and work on it on your own versus going through some sort of debt management program or debt settlement, they'll talk you through all of that. Plus, they'll talk you through how your credit score might be affected in each case. So if you have questions on this one, please throw them in the comment bar. I will answer them for you. And we can also have our coaches answer them for you if you have questions. So let's dive into the number 4 way to improve your credit score, which is an increase in credit limits. So there are a few ways you could get an increased credit limit and in turn increase your credit score. If you have a credit card, you can go to the servicer's website, log in or create an account, and navigate to where you have your account information or credit limit information. Sometimes it's as simple as the push of a button, right? You can click a button that says increase your credit limit or something, and sometimes it says request a credit limit increase, something along those lines, and you either request an increase or they'll let you know what you're approved for, or you can type in your request and they'll approve or disapprove. Obviously, if your account isn't in the best standing, they won't likely approve you for a credit limit increase. But if you've been paying on time and your account's in decent shape, they might give you a bump, which could then bump up your score a little bit. So that's a really easy way to increase your credit score. Lastly, the number 5 way to increase your credit score, quick and easy and simple. We're going to wrap this up with an overarching tip to increase your credit score altogether and long term is avoid hard inquiries on your credit. We talked a little bit about this last week, but hard inquiries happen anytime a lender or servicer checks your credit to figure out if you're eligible to qualify for their program or product. When they do that, it's inevitable that it will ding your credit. If it's a hard pull, it will negatively impact your credit slightly, whether you have a good credit score or a bad credit score. The other major thing to consider is that new hard inquiries can stay on your credit report for 2 years. They really only affect your credit score for about 6 months, but it's still really important to choose when you're doing a hard credit pull what's really important. You'll have hard credit inquiries for things like loans, store cards, travel cards, fuel cards, etc. So one thing to note is that for secured debt like a car or mortgage, you can have multiple inquiries, hard inquiries, over the course of usually about 14 days, and it will only hurt your credit score once. Not all those hard inquiries take away from your credit score. So that's our show today, you guys. 5 ways to improve your credit score, especially if you don't have a great score and you're ready to make some money moves in the right direction. Just to summarize the show for you, here are the 5 main ways we talked about today. If you're just tuning in, check out that credit report because it's free, so hello. Plan out your payments, whether you can make them this month or not, plan ahead. Pay down your debt. You can do it on your own, or you can call our coaches and we'll map it out for you, which is also free. Ask for increased credit limits. The worst they can say is no. And lastly, avoid new hard inquiries and just make sure to know where you stand and plan your inquiries in advance. Know what's a priority and what's not as important. So that's our show for you guys today. Thank you so much for tuning in. As always, please make sure to like and share this video, like our page. Today's show was a unique new way to get all of this content out to you guys. So please let us know if you like it or if you didn't. I definitely want to know. And if you have questions, as always, you can comment on this post or even you email me directly at askabby@creditanddebt.org. Tune in next week for our show. We're going to start a brand new series for you and hopefully answer all of your student loan questions. Thank you again, and we will see you next week on Ask Abby.